Welcome to the Deep Dive, where we really try to cut through all the noise and get you properly informed.
Good to be here.
So today, we're diving straight into a market that's, well, seeing a lot of green, especially after what felt like a really intense week of news.
Yeah, definitely. Crypto specifically.
Exactly. We're talking crypto and specifically Ethereum. It just popped above $4,000. First time since late 2024,
Yeah.
finally catching up to Bitcoin's big run.
It's a huge moment, really.
It is. And so our mission today really is to unpack what's driving this big market shift. Why is institutional money suddenly looking beyond just Bitcoin? And what are the maybe surprising barriers still making Bitcoin kind of tricky for everyday stuff? And then there's the whole wider economic picture, geopolitics. How's that shaping things?
It's fascinating how it's all coming together, isn't it?
Yeah.
We're going to look at how Wall Street is sort of packaging Ethereum now.
Yeah.
Why buying that coffee with Bitcoin is still, well, surprisingly complicated even after, 7 years of the Lightning Network. And maybe the biggest surprise, institutions like Harvard University actually putting money into crypto. It's a real deep dive into how these worlds, traditional and digital, are starting to merge.
Okay, let's definitely unpack this. Because Ethereum, it's clearly having a moment.
Yeah.
That breakout above $4, it feels like it's leading the optimism right now. The whole market's pushing near, $4 trillion?
Yeah, close to it. And, a big piece of this is actually strategic. It's coming from the Ethereum Foundation itself.
Oh, really? How so?
They're restructuring, basically refocusing everything on the core layer 1 development, the main blockchain itself, the bedrock.
Okay.
And this isn't just some tech update. It's like Ethereum sending a message straight to Wall Street saying, look, we're serious. We're building for the long haul, ready for real capital.
So it signals more stability, corporate responsibility almost.
Exactly. Focusing on that core infrastructure.
Yeah.
Institutional investors definitely like to see that.
And Wall Street's clearly listening. You got major outlets like Bloomberg basically saying, okay, it's time for Ethereum to shine. And big names like Tom Lee from Fundstrat setting up specific ETH reserve funds. What are they seeing now that's making them pivot so hard?
Well, Bloomberg's pitch, it's familiar stuff, but it's compelling for Wall Street, right? They're hitting on Ethereum's staking feature.
Right, the income generation.
Exactly. You lock up your ETH, help secure the network, you earn rewards. That's different from Bitcoin. And then more broadly, they're pushing this idea of Ethereum as a platform.
Like for building apps and things.
Yeah, the Internet of Digital Assets, as they call it. So it's not just digital money, it's like foundational tech. A whole ecosystem can be built on it.
And the numbers seem to back that up. Bernstein had that report. ETH reserve companies bought 1% of all ETH just in July.
Yeah, 1%.
In 1 month. And here's the stat that blew my mind.
Yeah.
If BlackRock's Bitcoin ETF hadn't launched first, their Ethereum ETF could have been the fastest fund ever to hit $10 billion in inflows. What does that what if tell you about the demand just sitting there for Ethereum?
It's huge. That stat draws a really interesting parallel, I think. It's kind of like the 2017 ICO boom.
Oh, yeah, I remember that craziness.
Right. But this time, it's got Wall Street's stamp of approval.
Yeah.
Back then, Ethereum was new, loads of potential, but also tons of speculation. Now, that Wild West energy isn't just hype. It feels like institutional validation. They trust the tech now that's long-term potential. Wall Street's trust, which was mostly on Bitcoin as, digital gold.
Right.
It's clearly expanding. They're embracing Ethereum's capabilities as like digital infrastructure.
Tom Lee, he had some slightly different reasons for why institutions like Ethereum, he mentioned its uptime, it's never gone down.
Right, rock solid uptime.
And maybe more surprisingly, he called it the most regulatory compliant network, which is interesting. Why are those points maybe more critical than just transaction speed or how big the ecosystem is?
Well, it raises that question, doesn't it? Why Ethereum over, say, Solana or other layer 1s?
Yeah.
And for Wall Street, a huge part of it is just access and trust. You can get Ethereum ETFs from names everyone knows. BlackRock, Fidelity.
Okay. The big trusted players.
Exactly. That makes it way easier, more palatable for institutions. And the fees are lower too, right? Like 0.25%, maybe even 0.19%. Compare that to a potential Solana ETF, maybe 0.75%.
So the cost and the brand name matter?
Hugely. Trust in a firm like BlackRock. They're the biggest investment firm globally that drives enormous inflows. Right. For institutions, predictability, ease of access. That's often paramount.
And it's not just the old guard. We're seeing new folks jump in, like FGF, that investment firm. And even this company, Nix NASD, they announced a new $5 billion crypto strategy, and it's specifically focused on Ethereum.
Yeah, it's a pretty clear signal where some of the big money is flowing right now.
Okay, so Ethereum's making waves on Wall Street. What about Bitcoin then? Is it still just digital gold, or is that narrative shifting too?
I think it is evolving. I mean, even the Financial Times putting Bitcoin on its front page, that's a big shift from how they used to talk about it.
Definitely. And Jack Dorsey's company, Block, used to be Square. Their CFO sees Bitcoin as more like an open internet protocol.
Yeah, for moving money at internet speed, making cross-border payments way better.
And Block's been committed for a while, right? Their Cash App.
Oh, yeah. 8 million accounts buying and selling Bitcoin on Cash App. They're getting into mining now, too, trying to make that more accessible.
And they're planning to let Square merchants accept Bitcoin through Lightning soon.
By the end of the year, yeah. Thousands of merchants. That shows a real push to get Bitcoin used for actual commerce, not just holding it.
Okay, but that brings us back to the coffee problem, right? If it's so great, why aren't we all just tapping our phones to buy coffee with Bitcoin? It still feels clunky. What's the real blocker? Not just speed, is it?
Well, the main network, Layer 1, it does have its limits for small stuff. Transactions take, 10 minutes average to confirm?
Yeah, not great for a latte line.
Exactly. And the fees can sometimes spike. So, yeah, impractical for tiny purchases.
Right.
But for big things, like buying a house,
right,
suddenly that 10-minute wait and maybe a slightly higher fee looks pretty good compared to bank wire fees or withdrawal limits. It becomes efficient then.
Okay, so layer 1 for big stuff. That's where the Lightning Network is supposed to help with the small stuff, the coffee. Can you just quickly break that down? What is it?
Sure. Think of Lightning as like a second layer built on top of Bitcoin. It's designed specifically for fast, really cheap microtransactions.
Okay.
It's kind of like setting up a bar tab or an IOU channel with your local coffee shop. You make lots of little transactions. Coffee today, muffin tomorrow off the main blockchain.
So they don't all get recorded individually on the main chain.
Right. Only the final net balance gets settled back on the main Bitcoin blockchain later, maybe when you close out that tab or channel. It dramatically cuts down the time and cost for each little payment.
Okay, so Lightning solves speed and fees for coffee, but it launched like 7 years ago. Why isn't it everywhere? Why aren't we using it? What's stopping us?
Yeah, good question. There are still a few key hurdles. First, it's just not as simple as using a credit card yet.
Right.
You need to start a Lightning wallet. You have to lock up some Bitcoin in that channel to get started. QR codes help, but that initial setup, it's still a barrier for a lot of people.
Okay, complexity. What else?
Second, and this is probably the biggest one, taxes.
The tax headache.
Exactly. In the U.S., every single Bitcoin transaction, even buying that coffee, is technically a taxable event, like selling a tiny bit of stock.
So you have to track capital gains on every single coffee.
Yep. Imagine the reporting nightmare. That's a huge deterrent. Even Trump floated that idea of exempting crypto transactions under $600, which kind of shows that everyone knows is a problem, but it's not law.
Wow. Okay. That's a massive hurdle.
And then there's a psychological thing too, isn't there? A lot of people, maybe like you said yourself earlier, see Bitcoin as digital gold. It's a store of value.
Right. Something you hold on to.
Exactly. So you're kind of reluctant to spend it, especially if you think it's going to go up in value. You don't usually buy coffee with a gold bar, right? Same kind of mindset for many Bitcoin holders.
That makes sense. So, okay, everyday use still has hurdles, but the institutional embrace, that seems to be speeding up. We're hearing about trillions potentially coming in.
Yeah, the 401k thing was a big catalyst for that talk.
Trump's executive order letting retirement funds look at crypto, real estate, private equity. How significant is that really?
It's potentially huge. Now, it's a slow process, right? It depends on the actual 401k providers. Vanguard, for example, they're still not fans of crypto and retirement plans.
Oh, okay.
But just the idea that trillions of dollars locked up in retirement accounts could eventually start flowing into crypto, that alone has really fueled a lot of market optimism. It signals a shift, from niche investment towards mainstream retirement planning.
And besides the 401ks, companies are still buying Bitcoin for their treasuries. Like Block.
Yeah, Block added another 108 Bitcoin in Q2. They hold, almost 8,700 BTC now?
Wow.
And you see smaller companies doing it too, accumulating smaller amounts.
Right.
Which is, good for price generally.
Yeah.
But you also have to consider if some of those maybe less stable companies start selling, that could add some downward pressure too.
True.
But the big stable ones, like Block continuing to buy, that's a strong signal of long-term belief in Bitcoin as a treasury asset.
But then you get news that's genuinely like, whoa. Harvard University, they reported holding $116 million in the BlackRock Spot Bitcoin ETF in Q2. When an institution like Harvard puts its endowment money into Bitcoin, what does that signal?
Yeah, that's a really surprising detail. And a massive milestone for institutional adoption. It just shows how far acceptance has come. Bitcoin's journey went from tech geeks to maybe high-risk investors, then more mainstream adoption. Then the institutions and banks started getting comfortable.
And now endowments and maybe even nations.
Exactly. It signals Bitcoin is maturing. Those crazy Wild West days of 100%, 200% gains every year. Maybe those are mostly behind us.
But still strong growth expected.
Yeah, strong, maybe more stable growth. Michael Saylor still talks about Bitcoin hitting like $13 million per coin decades from now, which implies, maybe 30% average annual growth. Yeah, still huge.
Okay. And another bit of positive news. Clearing up uncertainty, the SEC versus Ripple lawsuit over XRP, that's finally over.
Looks like it. Both sides officially withdrew their appeals after 4 long years.
So what does that mean for Ripple, for XRP?
It basically clears the path for Ripple to potentially list on U.S. stock exchanges. It removes that huge cloud of regulatory uncertainty that's been hanging over XRP forever.
Good for them, and maybe good for the industry. Sets a precedent.
Potentially, yeah. It's a significant win for regulatory clarity in the crypto space. Could help other digital assets facing similar fights.
Okay, let's zoom out then. Talk about the wider macro picture, because that's definitely playing a role here. The stock market's been surprisingly strong, right? NASDAQ hitting new highs.
Yeah, NASDAQ up 1%, S&P, Dow, also green. Holding up well despite some recent jitters.
But beyond stocks, there are some weird things happening in trade policy. What's caught your eye?
The gold tariff twist is pretty fascinating.
Gold tariffs?
Yeah, the U.S. decided to put import tariffs on those 1 kilogram gold bars coming from Switzerland. Caught the industry totally off guard. Most people thought gold would be exempt.
Why would they do that?
Well, likely a couple of reasons. Probably putting trade pressure on Switzerland after some recent tax arguments, and also maybe trying to encourage more gold refining, more production here in the U.S.
Okay. And the immediate effect was?
Gold prices jumped. Tighter supply, higher import costs.
And Michael Saylor, the MicroStrategy CEO, he apparently laughed about it. Why?
Yeah, reportedly he laughed because from his perspective, this just speeds up the shift away from physical gold.
Because physical gold is heavy, slow, hard to move.
And now it's taxed on import. Whereas Bitcoin, it's digital. No tariffs, no shipping issues, no physical storage problems. So for him, it just reinforces his argument that digital gold is superior, especially when physical gold hits these kinds of hurdles.
Interesting take. And the White House response was also kind of telling, wasn't it? Saying they'll issue an order to clarify misinformation about the tariffs.
Yeah, it doesn't deny the tariffs are happening, but it suggests maybe the rumors got a bit ahead of the reality and they want to control the narrative.
So they are using tariffs as a tool.
Seems like it. Using them as an economic lever to push policy goals. And we should remember, general U.S. tariffs are already in effect now. The market seems to have mostly shrugged them off, but there's still that outside chance U.S. courts could say some of Trump's tariffs went beyond presidential power.
Okay, shifting gears a bit, looking at economic health elsewhere. Canada seems to be showing some worrying signs. Big job losses.
Yeah, Canada lost about 40,800 jobs in July. That's the biggest drop in 7 years, if you exclude the pandemic chaos.
Wow. And youth unemployment is really high.
14.6%, highest since 2010. And their long-term unemployment rate, highest since 1998. It definitely paints a picture of a slowing economy up there.
And inflation isn't cooperating either.
Nope. Their core CPI measure, CPIX, it actually went up from 2.3% to 2.7%. So inflation's not cooling. The job market's weakening.
And didn't they already cut interest rates quite a bit?
They did. They went from 5% down to around 2%. So they've already used up a lot of their ammo, their ability to stimulate the economy by cutting rates further.
Which is where the U.S. Fed has a big advantage, right? Our rates are still much higher.
Exactly. The Fed's sitting around 4.25%. So if the U.S. economy starts to face similar headwinds, the Fed has way more room to cut rates to stimulate things.
Unlike Canada or Japan or Europe.
Right. Many other major economies have very little room left to cut rates. It gives the U.S. central bank a lot more flexibility if things turn down.
Okay, so that's the big macro picture. Before we wrap up, anything else significant happening specifically within the crypto world itself that caught your eye?
Yeah, a couple of things. Chainlink just launched something called Chainlink Reserve.
Okay.
It's a new fund holding over $1 million worth of their LNK token. and it's funded by revenue they get from their enterprise clients. The idea is it's for long-term growth, reinvesting in the ecosystem, which is, a good sign for sustainability and adoption by bigger companies.
Interesting. And what about that Binance partnership with a big Spanish bank?
Oh, yeah. Binance partnering with BBVA, Spain's third biggest bank. That's pretty fascinating.
What do they let people do?
They're allowing BBVA bank customers to use their traditional assets like stocks or bonds, presumably as collateral for margin and futures trading directly on Binance.
Wow, really blurring the lines between TradFi and crypto.
Totally. It makes it much easier for traditional investors to get into more advanced crypto trading using assets they already hold. It lowers the barrier and shows how much more comfortable traditional banks are getting with integrating crypto.
So, okay, wrapping this all up, what does this mean for you listening? We've seen this really surprising convergence, haven't we? Institutional finance, politics shifting, the crypto world evolving super fast.
Yeah, this deep dive really shows how quickly the space is maturing.
Yeah.
And hopefully it gives you a good grasp without feeling totally overwhelmed.
Exactly. So as we see players like Harvard jump into Bitcoin ETFs and big banks partnering with crypto exchanges, what does this new era really mean? Is that Wild West spirit of crypto gone or just changing?
That's a great question. And maybe if things like gold tariffs really do push the world more toward digital assets, how soon until money itself, the way we use it every day, fundamentally changes?
Definitely something to ponder long after this deep dive ends. Thanks for tuning in.